Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 220. It's actually been a full year now that we started these daily bytes. 3rd of May 2021 was the first one. So it's very heartwarming to see that we've been able to carry this for a year, and with a lot of your support, the daily bytes continue. Today's topic is we'll compare NASDAQ with the Nifty IT returns, and a lot of insights are there based on that. But first, a look at the markets. So the Nifty, again, following global cues, opened gap down and pretty much remained choppy through the day. And in the second half of the day, it recovered to a large extent, closing only 0.2% down. Banking was stronger and actually went into the green in the second half of the day. What was hurting was IT stocks and auto stocks the most. IT on the back of very poor trends in the NASDAQ, and the overseas Q have been extremely weak for the past many days. And as you can see on this chart, IT sector has now dropped almost 14.3% in the last month, and it is the worst performing sector in the last quarter also. Real estate also has been doing a bit of a soft leg down, is now down 10% for the last 3 months, and PSU banks are the third largest drop over 3 months at again around 10.4%. So not much gains in any sectors, but these 2 or 3 sectors losing most of the ground and causing some pain. In terms of the indices, small caps did not participate at all today. We remained at minus 1% or deeper through the day. Mid caps were also minus 0.67%, and other indices were somewhat between Nifty and these small cap losses. In terms of the weekend investing performance of the small cases, ATH was surprisingly in the green at plus 0.93%, MI 30 also green and plus 0.35%, and several others at minor gains or losses, but majorly MI 20 and EverGreen losing 1% and 1.8% on both of them, and largely tracking the weakness in the broader markets here, but some of the strategies actually did better than what I expected. In terms of the top gainers, Tata Chemicals plus 10%, NLC plus 9%, Canfin Homes, MRPL plus 8%, Capri Global plus 6.7%. Very good gains on several mid-cap stocks. Largely, the result swings are there, and post the results, the stocks are either getting hammered down or they are really going up. Solara was down 20%, Dixon down 9%, HFCL down 8%. Angel One is very surprising, is also down minus 7%, along with I think CDSL. Both these stocks have been slipping very hard. JM Financial also down about 7%. Nifty IT, as I said earlier, the recent trends have been a point of worry, and this is largely to do with poor cues from the NASDAQ. You can see here that the Nifty IT index has lost 21% since mid of January, and or rather calendar year, minus 20.5%, and Nifty has dropped only 3.7%. So huge underperformance by IT stocks. But when we see it from a very large time frame, IT has still done extremely well. And this is one comparison that I did over 20 years, where I've compared the IT index, the CNX IT index, that's in blue, also converted to US dollar terms by dividing it with USD INR and comparing it with this orange line of NASDAQ 100. So while we usually think that NASDAQ is a very high performing index, what we can see here is that our own IT index has actually done better than that in the last 20 years. And at many points during this rally, IT index was far ahead of the NASDAQ in many places. If I compare it just last couple of years, then IT index is also much more much far ahead than the NASDAQ. And this chart will probably show this. This is comparison from 96 till date, so about 26 odd years. And you can see here that in 2000 .com boom also, while the NASDAQ did go up 5, 6, 7 times, I mean IT index went up something like 60 times. And this is, mind you, still on a dollar to dollar comparison. If I do a INR to dollar comparison, CNX IT in INR and NASDAQ in USD, that is even more stark. And of course, IT index in US dollar terms did not make a new high for the next couple of decades almost. And now it has run up dramatically to this one. So over last so many 26 years, it's gone up 160 times. NASDAQ is up about 20 times. So amazing index that we have here, and IT stocks have really done a great wonderful sort of service to the investors who follow them. Another insight from Zomato. Zomato broke the 70 barrier, the 70 handle today, and since its listing it was sluggishly going up from 120 odd to about 160, but then since November it has been falling, and once it broke the all-time low at this point, I think it was a good signal that this is really getting a bit difficult to hold on. And usually I say that whenever stocks are hitting all-time lows, that is for sure a very high probability signal that it may go lower. Now it may or may not, but I think that at that point, actually much before that, but even if you want to wait till there, at that point you must reassess your thesis why you are holding that stock. Because at an all-time low, what the chart or the price action is telling you, that there is a seller at that point, obviously who has bought much above it, because this is now lower than anybody who has bought it, and they're still willing to sell, and they're still willing to sell with volume. So that means those sellers who are selling at all-time lows with a vengeance are having some insight about what's going to happen. And basically there is no support left once you go to the all-time lows. So once you break the all-time lows, there is no support left. I mean, there's only resistance on the higher side, because everybody is stuck at various levels. And every time the stock will try to go up, those sellers will jump in and cause stock price to come back. So this fall here, and then there was this sort of a attempt to rally, then a new low again, then attempt to rally or to range bound, and had it started a leg up and above 100, then there may have been a chance. But now this is breaking this entire range also on the downside. So just keep watching where it goes, and once you see a formation of higher highs, higher lows, that may be the first time that you would want to consider it in some sense. But right now it's a falling knife, and hence these are some lessons that we need to learn from falling stocks. This is the comparison of Zomato versus the benchmark for the since its listing, I suppose. So Zomato is down 57% and Nifty of course is down 5% here. So these were some of the insights for today. Thank you for watching Daily Bytes, and tomorrow is a market holiday. Wish you a very happy Eid, and we will see you on the other side. Thanks, bye.